Hello, everyone, and welcome back to another episode of the Market Outlook series with me, Kavita Agrawal, the founder of EXP-Invest. Like every Friday, we are here to talk about Nifty, Bank Nifty, and the intersector analysis. And let's see how the momentum has been and what it tells us about the upcoming market. After my presentation, we will take the last 30 minutes to interact with the guests who have joined us. So the first part, so we have guests who've joined us on the Zoom webinar. There are guests who joined us on YouTube, on ET Live, on Twitter, on LinkedIn, so on and so forth. So we will take as many queries as we can, with the Zoom members being a priority. So if you also want to interact with me in this live session in the last 30 minutes, be sure to join my Telegram channel and register for the Zoom session with the link that is present only in my Telegram channel. The link is already shared to my Telegram channel. The link has already been shared in the comments while I speak. So now let me share my screen and let's get started with the 3-minute time frame of Nifty. This is a 3-minute time frame, and this is where the activity of this week started. This is activity starting Monday. And what do we see here? Very strong rally. So we had a resistance around 23,600, and we discussed last week that the market seems to be oscillating between 23,600 and 23,425. And it was very evident that whichever direction we take, we get a breakout, the market is going to continue in that direction very strongly. And that is exactly what we saw. So this week itself, we braved 3 key resistance levels on the index. The first is 23,600. The second is 23,850. And the third is 24,120. Now, what do we see? Now we see that Nifty, since for the first time this entire week, has broken the support level of its bull range. You might be aware, if you are also a user of RSI, or actually not, because a lot of people don't know this about RSI, that when the market is in a trending mode, RSI takes on a range of itself. So what we are seeing here, that even though the price hasn't really reversed, we don't see any higher low or higher high yet, the RSI, however, is being a leading indicator, starting to show a lower high and a lower low. So if you compare with this particular peak on RSI, this peak, which was exactly at 24,120 of the 3-minute time frame, versus the next peak, which is also at 24,120, we are seeing RSI has formed a lower low versus a lower high versus a lower low. If you compare this low, which was over here, so the lower low on the price is yet to come, but the RSI has already created a lower low because the price has gone down. So we are seeing some weakness in the momentum which RSI has already picked up on, demonstrated to us in the 3-minute time frame. So now this level of 24,120, which is the resistance, continues to remain resistance, but we also have the support to look out for, which is 23,850. Now going to the 15-minute time frame. Let's add a little bit more dimension to the charts here by stretching it. Now on this 15-minute time frame, one good thing that I see is volume pickup at the beginning of the trend in both the situations. Pretty good. So the rally that we've seen here Thursday, that is yesterday, it was backed by strong volume pickup, at least as per the 15-minute time frame. And this volume pickup has actually been quite evident since 20th of June. That is quite positive. The underlying trend of Nifty continues to remain very strong. But what we are seeing here is that maybe a little bit of correction can be expected in the index. 23,850 is going to be my main support for the market. And as far as the 15-minute is concerned, I will be on the lookout for what the 15-minute time frames RSI does when it approaches the level of 40. So that is why I have an alert here at the level of 40. Now coming to the 75-minute time frame. Now what is interesting in the 75-minute time frame, don't worry about my chart looking a little cluttered. We'll get to the charts. I want to draw your attention first to the RSI of the 75-minute time frame. And mind you, all my RSIs are 25 period setting, not 14 period setting. So what you're seeing here is that a negative divergence occurred near this thick blue trend line, which coincided with the previous market's high. So until the previous market high was not completely breached, volume participation did not return to the market. But once this previous market high was breached and the price continued to rally, now we're seeing, first of all, volume participation come in. Second of all, there was a negative divergence that got forged, including the 4th of June activity and the high that was consequently seen. But that negative divergence did not give us any negative activity. It just fizzled out. It's not necessary that every time RSI gives a negative divergence, there's got to be a correction. Absolutely not necessary. So what we're seeing here is RSI is well above the level. See here on 75-minute time frame telling us everything is well, everything is extremely bullish, and the volume activity also is picking up when the price is moving upward, which again is an indication that this bull run is pretty healthy, pretty strong, and is expected to continue. If it takes a dip, I would expect it to get strong support on 23,850 or 23,600, difficult to tell, but I expect the market to definitely continue rallying. I I'm looking out for the achievement of the resistance or the target of 24,525 within this leg of the markets rally. Now coming to the daily time frame, after a long time, since 18th January, first time, the daily time frames RSI has broken above and sustained above the level of 60. This is big. Why? Because the level of 60 was acting as a resistance since January. And what I have also discussed multiple times in the past is that this entire consolidation that we saw within this range, this entire part, this was actually the Nifty taking a breather from what? Taking a breather from this amazing rally, that unfolded. And if you want to see what a one directional rally looks like, you need to look at the charts from 26th of October all the way to the 15th of January. This was pretty one directional. The market kept moving up and up. And now it seems like market is in a mood to do something very similar. So my first target, like I said, is 24,025 for this rally. And this momentum seems to be wanting to continue. My strategy on my swing trading positions is very simple right now. I am 100% invested. My Trade Together program members are 100% invested in the market with my recommendations. And now we are just trailing our stop losses. Stock ideas, new stock ideas will be given when either existing stock ideas trigger targets. Two stock ideas are very close to it. Many have already triggered targets. Or we have stop loss triggers and new opportunity pops up somewhere else. Or I find opportunity which is much more attractive than any open idea that I have. Yes, I also keep an eye out on potentially replacing existing ideas with new ideas if the need be. Now coming to this Bank Nifty's chart, again 3-minute time frame. So what we see on the 3-minute time frame, the Bank Nifty is already creating lower lows and lower highs, way more sensitive than the Nifty here. And on the Bank Nifty's 3-minute time frame, a very clear cut negative divergence was forged here. The positive range was broken earlier in the morning rather than in the second half, which was in the case of Nifty. And here we are expecting a little bit more correction. So 51,000 was my initial resistance, which has been crossed, braved, and used as a support also in this rally. My next target for Bank Nifty is around 54,000 rupees. Now, 15-minute time frame continues to look pretty bullish. We are seeing it has fallen all the way down to the level T. But let's zoom out a little bit. So fine, this blue trend line is a pretty important resistance. So like I said, I would expect Bank Nifty to come and test this level. The volume activity, let's take a quick look at the volume activity. Now, this is the reason why I don't trust banks right now. When this upside began, there was some volume participation, which made me comfortable. I made some bets in the banks. But then the next leg of rally, if you see, declining volume activity, not comfortable. And then if you look at this little bit of downside, here the volume activity actually increased, which, like I said, I'm not feeling very comfortable. I'm more comfortable with financial services sector than with banks right now. Sure, there is rally unfolding, but I am not seeing clear enough signals to actually make an entry. So you will see in any of my Trade Together program recommendations, if you're a member, you will notice there are no banking recommendations at all. There are, however, financial services recommendations, at least in the higher end plan, which is the exclusive plan. So let's take a look at the metal sector also, because Abhijit Prasad has asked for that. So we'll take a look at that. So what I'm seeing in the metal sector is clearly the metal sector has created like a double top formation, and against the double top, it's also given massive negative range shifts and negative divergences, which make me very uncomfortable. So metal sector is not my choice of the sector for a bull run. In fact, I had some metal stocks in my holding, which I have booked out profit during this period because it was very evident that RSI is pretty shy of the level of 60. So I think the overall market is also undergoing a major sectoral churn, and you will see new sectors like chemicals has already started rallying, IT already started rallying, Infosys, Wipro done so, smaller stocks in the IT sector doing great, LTIM, Latent View, all stocks. Very good rally coming in there. So I expect the IT sector to continue to rally quite a bit. Pharma sector also has some opportunities. Financial sectors, there is some opportunities. Be careful of the bigger, broader names. BSE not looking so good. So with that, let's move on to the indices chart. There you go. And I want to look at it from Monday onwards. So let's see who were the winners, who were the losers. Energy sector has come right to the top with the biggest wins this week. And if you see energy sector, zoomed right up. So 3.56% increase there. Infra sector has done better this week. Last week, it was the loser. IT sector, like I said, is one of the winners. Finance sector is looking good. Service, commodity, I don't have much opinion on. Banking is doing good, but I don't see an opportunity for fresh entry there. So I'm going to steer clear of that. The CNX 500, that's the benchmark index that I use for this. Healthcare, pharma, there are opportunities. FMCG, I am absolutely not interested in. In fact, the rally that we've seen from the 4th of June to till date, I think that was a very short defensive rally, but I don't see a lot of strength or sustainability in that rally. I think this rally is a good opportunity to probably get out of FMCG stocks if you're holding big positions, but definitely don't try to make the mistake of making fresh new positions. PSE sector, be very careful. Sure, some stocks do have more steam left in them, but there are also some stocks within the sector that are showing exhaustion. So negative divergences are starting popping up, which means it's time to trail your stop losses very tightly and not make fresh entries here. Right? When you make fresh entries, you want considerable upside, not considerable downside as a higher probability. And what else? The realty sector, again, I have been looking at some of the realty stocks, but they did not, even though the stocks are at a dip, did not really encourage me to make fresh entries as of just yet. Some negative divergences are prominent, so not really on my radar here. In the comments, I can see members have started asking, our rules. If you want me to look at your stock queries, I request you to go and fill up this form, expinvest.in/stock request. As per SEBI, I am required to maintain a record of all the queries that I'm answering from my members. So please make sure that you fill up this form if you want me to answer your queries. Depending upon the time available, we will look at that. So we have Kunal with us on Zoom. So welcome, Kunal. You are seeking my analysis on telecom sector. So I don't think on telecom sector we have a dedicated. I don't think we have a dedicated index that I can actually look at. As far as I know, it is not there because I track indices pretty closely. No, we don't have an Indian this thing. So I would request you to ask me a specific stock if you're interested in. You've also asked for the analysis of HDFC. So let's take a look at HDFC Bank. So HDFC Bank has given a strong rally and it has started to move up. But is this rally going to sustain? And what is this rogue trend line doing on my chart? I don't know. All right. So HDFC Bank very close to giving a breakout out of its lifetime high. Here we saw some correction. Here again we saw some volume pickup, but the last 3 weeks volume activity has been pretty dull. So the dull volume activity doesn't really give me a lot of confidence for making a fresh entry in HDFC Bank right now. In fact, I would wait a little bit more and I would see whether HDFC Bank actually gives a breakout above 1750, and if it gives a breakout, whether or not it sustains. Now, if you have a short-term position in HDFC Bank, I will strongly urge you to use a stop loss at the level of 1665, and that's from a short-term perspective. But if you are holding on to HDFC Bank with the expectation that a breakout happens and you get to ride that rally, in that case, I would ask you to maintain your stop loss right below this exhaustion gap. So around the level of 1590 is where I would ask you to maintain your stop loss. Right. And Kunal, in addition to just mentioning the stock names, I would also request you to ask what is it that you're looking for, short term, long term. You're also welcome to raise your hand and come off mute if it helps. But let's take a look at analysis request for CDSL in the meanwhile. Oh, big jump today. CDSL, amazing, 17-18% with very strong volumes. So that looks pretty good. And before giving this breakout, I see the CDSL 15-minute time frame gave a pretty nice positive divergence. But what I want to see is this. So CDSL has been in a very strong uptrend. Here it gave a negative divergence and was in a little bit of correction. Now this breakout is actually this gap that you're seeing. This is a breakaway gap, which basically indicates that this is the beginning of a fresh new leg of upside here. And I would highly doubt that this gap is going to get covered. This looks like the beginning of something very interesting. And if you historically CDSL, every time it starts a new rally, fresh new leg of rally, it does something very similar, very strong leg of upside, with very strong volume. So I would expect this new trend to actually continue on CDSL. And as for target, I am going to use my trend line projections for the target. I would expect this rally to continue, draw another internal trend line there, and I would expect at least a target of around 3,000 rupees on CDSL. Currently, it's trading at 2,400. And I would also like to keep a stop loss, obviously, at the level 5. So that's for you, Ashish. Let's now move on to... So Sahil, welcome back. So you're asking for the analysis of Nazara again. Let's see. RSI has touched 40 on the 75-minute time frame. What is this? RSI, look at that. I told you RSI touching level of 40 would be a good place to enter, I think. So 20 EMA also coincided with exactly that level. That's exactly where the price has come down, touched the level of 40. So let's hide this volume for now because urgently don't need to look at it. And then the price has started to rally again. So I think Nazara, again, this is potentially the beginning of a new leg of rally. So I would keep my stop loss right at this base, 805, and continue to hold on this stock. first target itself would be the previous high. I think the previous high can easily get terminated here. In fact, I would take this previous of the previous high as a potential target and keep 1200 as a target on this stock. So for Harikumar ji, let's take a look at Renuka Sugars. You are looking for fresh entry. I don't think Renuka is attractive for fresh entry right now because it gave the signal back, and on 75-minute time frame, it's showing a negative divergence, which is a clear-cut sign that you don't want to make a fresh entry in the stock right now. Now for Kunal, let's again take a look at ICICI Bank. So Kunal, since you've not mentioned any details, I'm assuming that you are looking for the analysis from a short-term perspective. I wouldn't recommend a fresh entry in ICICI because like I had a target of 1220, which has been achieved. So I am not very keen about a fresh entry in this just yet. Take a look at the volume. The volume was strong. It kept improving in the first half, but second half did not really go up so much. And also ICICI Bank is quite a momentum player. So from a short-term perspective, I would expect it to take some correction at the least. Not very good for fresh position. So I can see on Zoom, a lot of members are asking for stock analysis. Again, I will insist that visit this link, expinvest.in/stock request, on YouTube. So all the members who are attending the session on YouTube and want stocks analyzed, please visit the form and fill it up. Then based on first come, first serve, we will attend your. So Kunal is asking for 3 things that make stocks look interesting technically. So Kunal, I like to look at the volume analysis, the momentum analysis, and I like to do it on multi-time frame. So those are the 3 things. But then that's not the only 3 things. There are still a lot of other things that need to be taken into consideration to make a solid decision on execution. Thank you so much, Sahil. I really appreciate your kindness. Let's now open our link for a stock request and see what requests have come in. So per day, we'll take just one stock request. So Prakash on YouTube has asked for the analysis of Titan. I actually like Titan. So let's move towards analysis of Titan. He's asking, ma'am, correction, or it has created a really nice higher high. And it has also, it looks like, is interested in creating what I like to call a higher low. So this is basically a sign that it is going into strong rally phase, and it has been giving positive divergences repeatedly on the 75-minute time frame. Also, the 75-minute chart is moving into the positive range shift. All of these things together indicate that this rally is here to stay. And I would hold on to Titan for a stop loss of 33.50 and a target of 37.40. But remember, just buying good stocks is not enough in the market to make money. You need to buy them at the precise time. And even if you bought this stock listening to me, which is again not recommended, because if you don't manage your positions, which you've purchased on listening to me on YouTube or ET Lives, it's not going to help you. You need to properly manage your position. By manage your position, set your stop losses timely, change them on the basis of what the momentum is suggesting. If the momentum looks weak, you need to keep tighter stop losses. If the momentum looks strong, you need to give it breathing room. Now, this is usually opposite of what other people do. But then my objective is that if it's already looking weak, then I would rather take away whatever unrealized profit is there. And if it is looking strong to me on a larger time frame, I would let it ride while giving it room for some extra volatility. Moving on, Praveen has asked for analysis of Dr. Red. I think he means Dr. Reddy. I request all members, especially who are filling the stock request form, to make sure you're inputting the right ticker names. So Praveen is with us on ET Market Live, and he wishes to know the targets, or I suppose you already have a position. So I have also given this talk as part of my Trade Together program, where I give swing trading, actionable advice for swing trading. And we entered around 5,900, and we are very close to the target. So my target on Dr. Reddy is 65.37. So that's just 2% away. So the stop loss that I'm maintaining is 6,315. You can also maintain the same trailing stop loss. And because this high basically coincides with the previous level, but I think Monday, depending upon whether the market looks positive or negative, I might revise my target to 6,700. So Kunal has another question on Zoom. Would budget impact the sector rotation this time, or older theme continues? Kunal, I don't know what the budget is going to be, so very difficult to say. We'll have to see what the budget comes out with. If it is something that's extraordinarily supporting any particular sector, then yes. If not, then not. So with respect to major events, I would say don't pay a lot of attention to what it might do, because it is impossible to predict stuff. Okay, stay invested in the market and use high quality risk management strategies. Hone your risk management skills. Just applying a stop loss is not equal to using risk management strategy. You need to constantly also go back and study what went right, what went wrong with the stop loss that you set, and how you can make it better over time, over years in the market, decades even. So don't pay a lot of unnecessary emphasis to events. They usually don't have as big of an impact. And even if they do have a big of an impact, for example, the election day event, there is very little that you can do to prepare for it, because if it's nothing, but if it is something, then it's going to be so massive that the best thing you can do is nothing. And then once the storm settles down, then you decide what you should do. And by that, I don't mean leave the market for 3 months and then come back. No, just don't take impulsive decisions. Now, let's take a look at J&K Bank for ARC. So banking sector, like I said, I am not very enthused. JK Bank, while it has done pretty well, I think it had a strong bullish range going on until this point. So I would wait to see if the RSI sustains above the level of 55 at the least. Right now, based on my observations on the 15 and the 75-minute time frame, what I'm seeing is that the weakness is pretty prominent, and I would expect this low of 102 to at least get retested in the stock. Now, Madhavan ji has asked for two stocks, Vishaka and MRF. So we'll take a look at MRF, and if there is any time left, then we will look at Vishaka. MRF Limited. So you're asking, when will the stock go up again to its earlier 52-week high? I don't know when, but I can tell you what it looks like it's going to do. So MRF, as we all know, is a really strong stock. And ever since this massive leg of rally that started since 16th March 2023, no correction, but it only recently took a bit of a correction since 22nd February. And since that correction, it has declined 17% in an absolute terms. But if you compare the retracement against the previous rally, it shows 38.2% retracement. Now, what is very interesting to me here is that the RSI on the daily time frame has been sustaining the level since quite a while. And I would also say that it has created a positive divergence right here on the daily time frame. Going down to the 75-minute time frame, also I am seeing very beautiful positive divergence and positive range shift. The stock is already starting to break above the level of 60, but whether or not it sustains is again going to be a question. However, since the stock is quite close to its support and has not given a run up, I think MRF looks pretty attractive as a potential entry point. Now, naturally, since the stock price itself is quite expensive, it's over 1,30,000 rupees. Number of participants might not be very high here, but that's okay. The market cap is pretty healthy. So here, stop loss, probably a good stop loss would be around the level of 1,22,000 to round it off. Let me actually just round it off because the number is hurting my eyes. There. So that looks like a pretty good stop loss. And as for the target, considering how strong the previous rally that was unfolding was, I would expect a minimum to minimum target of the previous high, but I'm pretty sure that this target is going to get achieved. So what I will do is I will take this Fibonacci extension tool and draw this here. And based on this extension tool, at least this 0.618 is where I would expect it to rally up to. So 1,57,000, 58,000 is going to be my very first target on this stock. Now, because I like this stock and because I'm terrible at remembering things, I have a system which I use personally to get reminded of important stocks on the next trading day. I tried sticky notes, but I have a tendency of losing them. And this is, by the way, also a system that I teach in my advanced swing trade training program. So I'll just draw a vertical line and I'll set an alert on that. It's called assess one time. When this alert, basically when the price opens and crosses this vertical line at 9:30 exactly, I'll get an alert that I need to assess this stock. Works better than any other note keeping system that I have come up with. Then once it gets triggered, I'll just delete the line and the alert gets triggered. So guys, if you're interested in learning swing trading from me, be sure to join my advanced swing trade training program. The new batch is going to start from the 14th of July, which is Sunday. 3 classes a week, and the sessions are going to last 8 weeks long. Because there's quite a lot of time left, I'm giving out an early bird discount of 20%. If you want to know more about that, join my Telegram channel. So far, if you've liked and enjoyed this session, if you find the knowledge that I'm sharing is useful, whichever platform you're viewing this on, please don't forget to give this session a thumbs up, and please subscribe to my YouTube channel if you want to continue to get high quality content on technical analysis and stock market research. So we have a query from Prateek on LinkedIn. He's asking, is the market overvalued or fairly valued? So Prateek, I think the market valuation is something that's a very overhyped parameter, close to impossible to ascertain the fair value of the market at any point of time. Personally, I believe that India has a lot of potential. The next 10 to 15 years, India is just starting to enter into its golden era, and India is equivalent to a golden goose. So if you want to change not just your own financial status, but also set your upcoming generations, it's very important that you pick up the skills of stock market trading and investing, and you do it seriously, and you do it today, because 10, 15 years down the line, that's going to be your absolutely the biggest regret. And like I also said in my Nifty analysis, that a new leg of rally has just started. The whole consolidation or channel bound movement that we've seen since January all the way till March was the market taking a breather from the massive rally that unfolded between October till the month of January. And that same kind of rally is what I am expecting in the market to unleash again. So those who have already been sitting outside the market have missed so much, but those who are waiting for crash or a correction right now are going to miss out on a lot more. That's for you. So we have some queries from Priyanka. Priyanka, welcome back to the session on Zoom. So Priyanka has also joined our exclusive plan recently. So Priyanka, I hope you're having Chola Finance. Let's take a look. I actually like this stock. Very good for swing trading, very strong movements. And let's clean up the past set targets. So I set this target in the stock back in January 24, but before that could be achieved, the market also, the stock itself took like a massive correction, right? So here we saw strong positive divergence and very strong positive range shift, but it looks like the Elliott wave count might be over. So I would like to see a little bit of correction before I can enter the stock. Here, 15-minute time frame is not really saying much to me. What if I draw a little bit more of these cloned lines? I think if the stock gives me a breakout above 1450, I would be interested in entering the stock. But what I'm seeing in the past price activity, this is a very high momentum stock. I would like to see a 50% retracement of the most recent leg of upside before I make a fresh entry. So I would practice patience. And if you have an existing position, technically, if you'd asked me earlier, I would have asked you to set a stop loss at the level of 1440 or 1437. So your stop loss would already have been triggered. If you are holding right now, again, I would think it's better to maybe exit the stock once, let it correct again to around 1330 and then make a fresh entry. So Sahil on Zoom has written, your calls have been great, made good in HFCL, Wipro and Infosys. Thank you so much, Sahil. Thank you for being such a regular and dedicated member of the Trade Together program. While we wait for our Zoom members to ask us more questions, I will just turn back to the stock query form, which I hope you are taking the time to fill. So for our Instagram members, again, in the comments, we are commenting the stock request form if you are interested, because I'm surprisingly not seeing any queries coming from my Instagram viewers. So make sure that you find the link to the form from the comments. So move forward with Ajay Gupta's request on this stock, which I don't think I can pronounce. I'll go with Styrenex. Don't laugh if it's wrong. And this is the volume. So I'm fine. We'll come to the volume later. Let's just look at the price activity first. So very strong bull trend for sure right here, but also not, I wouldn't call this stock a super trender at all. It has a tendency of rallying, correcting, rallying, correcting, rallying, correcting, which for us as swing traders is absolutely phenomenal because it means that we get lots of entry exit opportunities. Something that I've been doing repeatedly in stocks like BBTC, BASF. BBTC is one of my long-term recommendation stocks, which has actually become a multi-bagger most quite recently. And the long-term plan is less than 1 year old. So it's fabulous. Hopefully in the coming months, we'll see more multi-baggers out of that. So this on Styrenex, strong rally has already unfolded, but I think the better part of the rally is behind us because I can see big negative divergence had unfolded, but the stock didn't really correct, which is fine. I'll give it. It fizzled out. Here, there was positive range shift, but then very recently, the positive range shift was violated, which is very typical before the fifth wave unfolding. So I believe this was the fifth wave unfolding, and now is not a very good time to make an entry. Also, you can see there was heavy selling on the stock on 27 June. So today, I guess because the overall market has been extremely bullish, also it is a very illiquid stock. You want to be very careful with respect to making big positions. Now, because the overall market has been so bullish, the stock has given a pullback. It's a good opportunity for you to make an exit. I would expect, at least from a short-term perspective, that this stock can give some correction. So you want to book out your profits and enjoy your gains. Aman, let's look at IE Mine, Fame Industry. Ooh, I get to know and look at so many new stocks because of all the stock queries that I answer on in my live sessions. It's a lot of fun because I tend to stick to my own limited watch list of around 200 stocks. And this way, sometimes something very interesting catches my eye, and then I go back to make sure that the fundamentals are strong. For a few months, I will follow up with that stock. And if it meets all my criteria in terms of personality, move, and if it feels like a stock that can be part of my inner circle, then maybe it'll make it to my watch list. But this stock, I'm afraid, is not one of those stocks because here it's been cruising along a key trendline resistance with very mixed volume activity. The weekly time frame is not seeming very positive anymore to me. I am personally not interested in the stock because I am, like I said, predominantly a swing trader. So seeing such price action, my focus would be to maintain a very tight stop loss, and also the volatility that it is showing around the top, I would exit the stock, not risking my capital. Or if you are not very keen at exiting the stock immediately, I would at least ask you to maintain a stop loss at 1225. Sahil has a question. I have a practice of keeping some profit free shares to the tune of 5 to 10%. What do you mean by profit free shares, Sahil? Can you help me understand?
So I think you have given some great ideas. So let's say HFCL, for example, we bought at 90, sold at 110. So let's say I invested 1 lakh rupees there. So I made 20,000 on that. So I booked 10K profit and I kept shares of 10K. So is it a healthy practice or just for long term?
Oh, so you kept HFCL for long term. See, that actually really.
So let's say I bought 1,000 shares, for example.
Yeah.
I booked 950. I just kept 50 as free shares because I didn't pay for that. I already cashed all my invest money, and I also booked some minor profit, 50 shares of profit also.
Got it.
And I still kept 50 shares for lifetime,
Got it.
Let's say children or my next generation could benefit from it.
Got it. So
is it a healthy practice or not?
Yeah.
I just wanted to check.
See, the thing, I wouldn't go with that mindset, because what essentially you're doing here is you're isolating the profit that you've earned from part of your capital, which is not a very good practice. The whole idea of coming to the market is to compound your money, the money which you bought initially. So if you're going to think that whatever money you've transformed directly from your salary into your banking, into your trading account is your capital, and the rest is free money, that's not true. It's not free money at all. It's money that you have earned and you have paid tax on. So if you're going to still expose it to risk in the market, you need to grow it actively. And if you're choosing swing trading as your way of going forward, then it's better not to dangle between long-term investing and short-term investing, short-term swing trading. What I recommend members is that if you do want to build a long-term portfolio, then sure, for youngsters especially like yourself, firstly, because your risk-taking capacity is a lot higher, I recommend you to keep around 60-70% of your capital as swing trading capital. And then the 30% that you have as your long-term portfolio to begin with, you slowly grow that with profits that you're earning from your swing trading portfolio. That to not all of the profit, maybe half of the profit, or maybe again 30% of the profit. So whatever profits you earn, say in 3-month period, 30% of you that you take and you put it in the long-term portfolio. But keeping your goal very clear in your mind is important. So again, coming back to the basics, your goal in the market is not to book profits or make money. Your goal in the market is to grow the capital that you're bringing. So what you're considering as free money is not free money. It is part of your capital, and it is your responsibility to protect it. Now, for example, for HFCL, you retain some of the stocks. Say you're a subscriber of my service, you have access to a research analyst. Just ask me for a trailing stop loss. I would have told you to trail your stop loss at the level of 123 had we connected on the day it touched 130. Or say later you asked me, like, right now I think your profit should have already been booked because it has broken below the bull range here. So I would expect more correction to come down here. You don't want to be in a position, because essentially whatever little bit extra gain that you made, you've already given up because the stock came back down to our exit price, right? So whatever part of your capital it is, whether it is a capital you infused into the market or whether you increased it, you need to manage all of that as if it's your own capital. Yes, Sahil, I hope that answers your question. All right, great. Now take a look at KPIT for Priyanka on Zoom. I like KPIT, and I think it's a stock which has very strong underlying bullish momentum. For some time, it's been in consolidation, but the interesting thing is that it seems like the daily time frame is trying to signal that, hey, I'm done with consolidating. I'm making higher highs and higher, yet to form a higher lows, but definitely making higher high with phenomenal value. So let's start trading in me again. So here, from a short-term perspective, KPIT, your stop loss should be 1547, and your very first target on the stock would be around the level of 30. And for above that, I'm going to have to need to do a little bit more analysis. But because I really like the stock KPIT, I want to assess this again on Monday. So I will set a alert. Let's look at Praj Industries. Strong rally unfolding. This stock is a bit of a mix of a momentum mover and a super trender. It tends to give strong rallies, go into big corrections, big consolidations, does everything depending upon what is going on in the industry. So it seems to be operating within this little channel. And here I would expect the target to be close to this trend line, because this trend line has been respected pretty well. So around 950 is where I would expect the target to be. And as for you, the short-term stop loss on this stock should be around the level of 675 for you. So We still have 9 minutes left for the session, so let's move on with some other stock queries. Asian Paint for Asian Paints. So Asian Paint seems to be forming a bit of a base, and as you can see with all the arrow markings, that this is a stock which I like to repeatedly swing trade in quite a lot. But recently, for time, it's been in consolidation and been given some bearish movement. So I've put it on pause until it actually breaks above the 250 EMA. So, oh, interesting. Positive divergence on the daily time frame. This I did not see coming. But all right, so this is gone. This is gone. I think with a stop loss, now because we've seen positive divergence on the daily time frame, the momentum should start getting positive. Higher high has also been established out of this consolidation zone. And this, if I take as a recent low, I would set a target at 2,800. Don't want to give a lot of breathing room here because the stock has had a lot of time to breathe. It's time to get into momentum. And if it cannot do that, then tada bye bye again. So stop loss would be 2,830, and the target is already pre-mentioned here. But I think I would like to be a little bit more conservative on stock, considering that it's been through some pain in the industry recently. Big competitors entering the space. So 90 is where I would expect the target to be. And for my sake, we will draw a vertical line and set an alert. So Abhijit Kumar, one person, one request on the stock request form. So we will look at Nifty Auto for you. Oh, I think it is CNX Auto. So the auto sector index looks extremely bullish, very strong. It has given a bit of a dip here, but I would expect the rally to continue strongly further. And even within the auto sector, there are some stocks which are looking quite positive, but there are also some stocks which are not. Auto parts are looking quite good. I was looking at Motherson just today, and I think it continues to look pretty strong. But again, because the elephant's share or the lion's share of the rally is already behind, I wouldn't recommend fresh entry into the stock right now. Harshit is asking for the analysis of L&T Finance. Stock has strong underlying trend, but also given a negative divergence. This could be the new range. The bull range was here, but seems to have shifted a little bit lower. Does it look attractive to me for fresh entry? Not. Nope. Just like Chola Finance, this is not. It's not looking encouraging from a fresh entry perspective. If I were holding the stock, sure, I would be very happy to trail. But then again, even on the 75-minute time frame, clear loss of volume, negative divergence, not attractive, my friend. Now for Praveen, let's look at SYRMA. I don't know how it's pronounced. I will not even try. So for this stock, if I just wanted to quickly take a look at the market cap, I think it's right here at the top. I would say it's a small cap / mid cap stock, somewhere on the border there. Not much of a trend to assess, to be honest. I don't see any other trend line to be drawn. There are, if you're asking the stock from a swing trading perspective, I would say there are a lot of better options in the market. If you're also asking for long-term investing, I don't know about the stock, so I don't know the fundamentals, so I cannot comment there. But even then, I think there are a lot of really great options in this market, especially right now. So you don't want to go for the shady options or the. So now let's take a look for Mohammed Sheikh. Let's take a look at National Aluminum. What would be the bias for this stock? I don't know. What is your bias for this stock? I understand you're asking about the trend. So like I said, PSE stocks, you have to be a little bit careful. So here, if you see, look at the volume activity. First of all, the market has left the 4th of June fiasco way behind it, way past the peak, but not National Aluminum. It is firstly showing a negative divergence on the daily time frame. Secondly, it has not been able to cross above the 4th of June peak. Thirdly, the volume activity on the daily time frame is clearly low against an upside. And the volume activity was very high when the correction happened. So all in all, does not look attractive. The weekly, the daily time frame, the 75-minute time frame, the 15-minute time frame, all of them, in my opinion, are signaling that you should get out of National Aluminum. So my bias towards the stock is bearish. Within Telegram, right? If you want to connect with me, just hop over to your Telegram, search trade with Kavita. And when you search this, you're going to see quite a lot of results because there are lots of copycat channels. So just join this one with this different DP. This was my idea to leave the copycats behind. It's not going to last very long, but just make sure that you don't join a channel with has numbers or extra letters at the end. It's Trade with Kavita. And also take a look at the content. You'll see my analyst comments, my daily analyst comment. You will see my information about my stock queries. You will see information about my live webinars with lots of pictures of me on them. So very easy to assess that it's my channel. So connect on this channel, join this channel, because this is how you can connect with me. This is the easiest way to connect with me. And also, if you are a premium member, if you're part of any of my premium channels, then it's very easy to connect with me. You can just, oh, looks like I've been posting the wrong name. Anyway, so what you can simply do is you can book calendar links. You can book one-on-one meetings with me using the calendar. But if you're not a premium member, then you're going to have to use this link, which is posted here, exp-invest.in/booking. Last few queries. Let's take a look at EMIL. Again, EMIL, negative divergence, low volume, activity, illiquid stock, not interesting. Let's move on to DMART. DMART has very quietly come out of the correction, consolidation, established a positive divergence, gone into a positive range and started to rally. But I think from a short-term perspective, it is spining for a correction because we can see massive volume activity on red candles. Also, big negative divergence on the daily time frame. Also on the 75-minute time frame, what I can see is the positive divergence was there, but rally has occurred, and now we are seeing some negative range shift. So I want to see the stock come back down, maybe retest the 100 EMA again before I assess it for a potential long entry. So 44.60 or maybe 42.80 or maybe even 41.65. But for now, new position not suggested. If you're holding a short-term position, your target should have been 51.50 and you should have been out of the stock by now. But if you're still holding on to the stock, then just maintain a stop loss at the level of 4,640. I am a little out of breath. I don't know about you all, if you're sick of hearing my voice today, but this is all I had for you today. Thank you so much for joining me for today's session. We've closed the market at a lifetime high above 24,000 with strong momentum, and expect this strong momentum to continue in the market. Everything looks great. I will see you again on Wednesday in the Let's Get Technical series, where we get into one stock's charts with a lot of details or one concept of technical analysis. Last week, we did a session on rounding bottoms. We picked up the example of Alchem. Next week, I will see if I come across any new interesting concept that might feel inspired to share with you. We'll do that. Or maybe we'll continue the discussion on rounding bottom with another example of, but either way, I'll make up my mind and I will post about that on my Telegram channel. Don't forget to join me there. Thank you so much for joining. I will see you again on Wednesday. Namaste.